Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so here we got Bitcoin on the 4-hour, and basically what's going on right now is we have been in this range right here, essentially consolidating, slowly floating up the whole time. I'm going to turn off the moving averages real quick, and what you will notice is we have this support line that was originally the Adam and Eve support. We were able to bounce it back up and put in the shoulder right here, which was basically giving us the head and shoulders pattern. At this point in time, we are testing not only the initial resistance that we were able to find as support and then lost as resistance and then back to support, and now they've come together. The two have converged, and now basically we're just hanging out at the bottom area. And the last time we did that, we sold off, but we got bought up with some violent wicks right there. We came back, did it again, but we put in a higher low, so we got a little continuation and attempt back up for like a new high. But now here we are, just kind of hanging out right here, and we're not really like selling off or anything. So the longer we just kind of hang out right there, the more likely we are to break to the downside. We have entered our trades from everywhere up here, all throughout this range, and everybody in the group obviously has been killing it with our different trade setups and everything. Now we are basically expecting at this point in time this to essentially fail right here, sell off down to the heart line of the channel that we've been cruising in this whole entire time, here in the green dotted line. That's going to put us in line with our horizontal support right here in green. That's going to also form the Bart Simpson pattern that we've been waiting on. We could potentially sell off all the way back down to the channel. This is the measured move here, and red's going to take us down to that 10.5 range, at which point in time we will play it by ear. As you can see, we confirm back here that we're putting in divergences. Once we flip that slope line over red, you will notice also that on the Bellina Assassina, we now have our longer time frame moving average is underneath the shorter time frame moving average in white, and we got rejected once, we got rejected twice, and now it's violently selling off here. But the orange line is violently coming down, but at the same time price action is not coming down that violently. So what we would expect to happen at this point in time is continuation, and what we have here at the bottom is this blue is attempting to cross back to the upside, but it's made it all the way down into the bullish control zone. And you will notice back here throughout this entire trend that we have only really made it into that zone one time, 2 times, 3 times, 4 times, and then we have a couple little touches along the way. But if you look, when we zoom out here, you'll notice that in a strong bull trend, we do not make it down here into that zone. And every time we did, we got a violent sell-off. So we basically have got into it right here, holding support, violently sold off. We were able to get caught right there. And then you'll see we did the exact same thing again. We were then on the parabolic trend line right here, and then we got a push up and then violent sell-off back down to it, broke through it, able to consolidate and continue moving up. And then finally again, we did the exact same thing. We have violent sell-off down below the line. So although we may not just sell all the way back down, out of this range and reverse the trend right now, there's a very high likelihood that when we get that sell-off, it's going to be a violent sell-off and break down through support every single time. In a strong bull trend, you should be staying up in this red zone. You should be staying up in the bearish control zone and getting continuation. But that is not the case. And you will also notice now we have basically moved the longer time frame up here this whole entire time. And now here for the first time, we got the cross back over and we're sloping back down to the downside. And there's no divergence or anything built on this right here. So the likelihood that all of a sudden this is going to be the bottom and we're going to move back up to the upside is extremely unlikely. You will notice also how important this heart line has been on multiple occasions. All throughout the entire trend, and the channel itself was acting as resistance. We basically got our stabs up out of it, but failed to ever consolidate above it and stay up there. This to me is a spring. We just walked out to the end of the cliff. We threw a baseball straight up in the air as high as it could go. It reached terminal velocity, eventually runs out of steam and comes down, and that is the throw over. And now here we go. Continuation to the downside. I'm expecting a violent dump. We do have our stop losses in place because anything is possible, but at this point in time, the likelihood of continuation, we've crossed this back over blue, is stay red, continuation now all the way down. I would expect at some point in time this to pop back up after the breakdown, retest the breakdown area, which obviously we will have taken profits off that, and so will anybody else that was short in this trend, as where the rest of the market will obviously be getting wrecked. Because everyone thinks that we are bullish and going to continue to the upside, but that is obviously not the case, which is why we're going to exploit that and go ahead and take our gains from the market when they just give it to us that easy. So what I would expect right here is this blue to come back up hit the purple, sell back down in here, and then at some point in time, we're going to continue on. We may flip this back over into the black neutral zone, or we may continue with a large red one, or I'm sorry, large green one, and then finally at some point in time when we found the bottom, we're going to look for the hard buy and then the exit of the bullish control zone. So we're going to look for the actual hard buy signal to pop up in blue right here, and we're going to look for it to leave the control zone in the same way that this did right here. Red, we get the hard sell, we leave the control zone, but it's obviously much less reliable when it's counter trend. So the sell signals are going to be much less reliable, as well the buy signals are going to be much more reliable, because we are in fact still in a bullish trend on the shorter time frames, and we are obviously still in a bearish trend on the longer time frames. Everyone is screaming bull run, and this is it, and this is confirmation, but all those people do not know how to do technical analysis, and that is exactly what you're supposed to think. If you would pay attention to the CMEs and GBDC, you would see that on longer time frames, we never actually put in a higher high. All we did was just get all the way up to the previous high, and then got rejected and sold back off and put in a lower high on every single time frame from the daily, the weekly, and the monthly. But spot markets over the weekends, while every other market was closed, so one market out of three put in a higher high, and it's while the other two were closed. So what does that tell you? It tells you that the three markets do not line up, and we're always going to go favor to multiple markets and institutional money because of leverage, and because of that, what we're expecting is the two markets that are telling us we are not putting in a higher high and not moving to the upside and not confirming a bullish reversal in the of the downtrend. So we are just going to take the two out of those three as basically being like more powerful indication of what is really going on. Like for instance, I've used this example before. If you have basically like, three brothers, the three brothers, two of them agree on one thing and one of them says something different, the two big brothers are going to overpower the little brother, and they're going to get their way in the end. And that is the way I look at the financial markets in comparison to like the spot market or traditional markets. And if you don't agree with me that way, and you say that these whales have all this crypto from back in the day, and that's why they control it, and that's why it pumps on the weekend while everybody's closed, I would argue with you that if you see the absolute top at the end of 2017, you will notice that the uptrend was essentially just absolutely decimated from $20,000 on the actual day that essentially like the leverage markets opened up, and you were able to, for the first time ever, short Bitcoin. So if you want to go by all the previous history and everything, and you want to take into account all the previous things that have happened and use that as your analysis, you have to understand that in 2017 something happened for the first time ever. It was never possible before that to short Bitcoin with leverage. You could only sell actual spot Bitcoin. So because of that, we need to take into account that since then we have only ever been in a downtrend, not to mention that it changes the whole situation. So you can no longer use all the previous data as like 100% accurate for sure. Like this is it. We're going on this parabolic uptrend. Like, we're going to do this because we did it every other time. It doesn't work like that once something that substantial changes in the market. And anyone that is familiar with traditional markets and has been around more than like 2 or 3 years in the crypto space, not people that are 19 years old, with 50,000 followers, or people that claim to be market makers, running around, have no idea what they're actually talking about. Anybody that's actually been involved in real markets for a long time and done their research knows that silver and gold were both suppressed for an extremely long amount of time, because it essentially weakened the strength overall of like cash, and basically was like counterproductive to the US dollar and like actual markets in that sense. So you will see that once like the leverage trading and shorting opened up on those assets, it took them literally like decades to break back up, and gold is just now retesting its all-time high in US dollars, and silver is not quite there yet, but is extremely bullish. The technicals and the fundamentals are lining up. So while I do expect a retracement as gold is basically getting to that double top point, silver is actually staying slightly stronger. I do expect there to be a sell-off because everyone is extremely bullish on those assets right now. And it looks to me like every single market is going to be get a retracement right now, and it looks to me like cash is going to be, U.S. dollars are going to be strengthening as we basically put in on the weekly a double confirmed bottom, and then we also on the daily are breaking above our short period moving average and consolidating above that one, and we will next come up and test our second shortest period moving average, at which point in time, if we can stay above that long enough, we will cross them to the upside and enter a bull trend. And you will notice also, in this case, obviously everyone is extremely bearish on the dollar and says it's going to zero and it's going to crash and it's going to fall through. But I'm pretty sure that, something that's been going on for like decades upon decades upon decades, like, a 100-year-old trend is probably just not going to end all of a sudden because you want it to. And probably most of the people that are saying the dollar is going to crash and it's going to go to zero and gold and silver are going to be the new money, like your Mike Maloney's and all those guys, they probably, like Peter Schiff, also have like a company that sells gold and silver. They also probably have huge stakes in gold and silver, and they've also probably been saying the same thing for like the last 30 years straight. So what are the chances that all of a sudden after 100 years of fiat currency and 30 years of these guys saying that we reach the top and gold and silver are going to be the best asset in the world, and all of a sudden the dollar is going to fail? What's the chance all the time that all of a sudden they can just call the top after being completely wrong for the last 30 years straight? So, but I don't know. I know one guy who called the absolute top of the S&P 500, well, the whole entire U.S. markets back in, it was like around August or September of last year. I believe he played out the exact situation in a video. You can go find it. That's me, by the way. And then also you'll notice that basically since then I have called pretty much with perfect accuracy the tops of every single bull trend and every single bear trend in the cryptoverse as well. So essentially you might want to pay attention to who you're listening to and not just trust somebody that's been wrong for the last 30 years straight. So and you will also notice something very important happened here. We don't have to just reverse this trend all of a sudden, but we basically got our moving average cross, the red above the yellow. It crossed now, and now we are below that. We're dragging it down. We're finding support on the 89. We were able to find support previously on the 89, and every time we sold down to it, we got a violent wick back up away from it. But that's not happening now. We got our first violent wick down to it. We consolidated, bounced up, and now we're just hanging around on top of it. And what does that mean? That's basically people like me distributing the last little bit of their crypto onto the bulls as they attempt to buy up this right here. And very, very soon, now that we are done distributing all over their faces, it's going to dump down here to our moving average at 11,110. We're going to hit the 200 exponential, and then potentially come down as low as like that 10,967 or just basically 11,000. Which point in time we would expect the same thing to happen, where we get the violent buy up, that big wick, and then try to basically come back up and retest the breakdown. But we need to pay very close attention because, like I said, these signals that are coming through are telling us that this trend is very likely coming to a violent end. You'll notice also that in these previous times, when we flipped the parabolic SAR over and we started selling off like this, the parabolic SAR was coming down on a normal slope, a regular slope, a regular slope. Here, it started coming down and then came down at a regular slope. We are doing something different right now. We are rolling over. It's a rounding top. It's accelerating to the downside. Previously, we were just going straight to the downside and moving back up. Here we are accelerating to the downside. So what happens at the end of the acceleration? We get an extreme violent sell-off stab down here, break through, crush everyone's stop losses, and then we will get our cascading waterfall effect. And what we need to do then is reevaluate where it lands at. Now, what I would expect, obviously, is based on our levels of confluence, we have our binary pivots here in blue, and the binary pivots just so happen to line up perfectly with the moving average. So when we break down through this, I would expect us to find support on the binary pivots and the moving average and attempt to get this back up. But that does not mean that we're not going to get a violent wick that comes down through here. That's just where we would expect at least some kind of a bounce consolidation, an attempt to come back up and retest the breakdown as resistance. But based on the length of the trend and the amount of distribution that's taken place and the amount of time it has taken for the distribution, I would expect something probably like a little more realistic like this right here, where we get a violent sell-off, a nice little wick, maybe comes all the way down to 377, maybe the 528. I don't know. We'll have to play it by ear. But we will be taking profits along the way, as we have been taking profits this whole time. We have had quite a few successful trades, quite a few successful shorts, and even some nice little scalps to the upside. We've been taking our profits not only in cash, but also some of our spot as well. We had some absolutely phenomenal trades this week. I'm absolutely loving the group. Everyone is killing it. Everyone is learning. It's more than I ever expected, and had I known that it was going to be this successful and there was going to be this quality of people in there, I would have started a long time ago. So I want to just give a shout out to all the group members. Definitely glad to have each and every one of you. And to those of you, that weren't able to get into the group, I am sorry for that. In the future, we will likely expand it up slightly, as we may have like 1 or 2 spots opening in the future. But as of now, everything is going phenomenally. The TA is working out phenomenally. We just have to be very careful for the rest of the markets because, as you can see, everyone is getting extremely bullish. Everyone is saying buy the dip and all that good stuff. But in all reality, we are rolling over this trend for the first time. We never rolled over this trend the whole time through here, and then we finally get that parabolic stab up, and now we're rolling it over. So once again, 11.5. When we take out the parabolic SAR to the upside in green here, we would expect to come down to the 50 on the daily, which is going to correspond obviously with the 200, at which point in time, like I said, it's going to run into all the rest of these moving averages. But if you look here just for a second, you will see when was the last time we saw a green like that. Not the whole entire uptrend, not the whole entire uptrend, not the whole entire uptrend. And now look, here we are. Okay, and that just so happens to correspond perfectly with basically our slope line in blue right here on the TJD TDMACD, and then we have a bunch of red histograms in the row saying that we are essentially selling off, but price action is moving to the upside. That is a divergence between the indicator oscillator and price action. And basically what's going to happen now is once we get under that 21 moving average at 11,500, we're going to start dragging the 8 down violently, and then we will get that cross to the downside. I would expect us basically to find support on that 50 right here, 55, and essentially bounce back up and attempt to save the trend in the same way we did right here. We get the violent sell-off, comes down to the parabolic SAR, and then we attempt to come back up and save it. But like I said, there's quite a few things that are telling me at this point in time that we may not be able to save at this time. Quite a bit of distribution has been taking place in these markets, and it's very unfortunate that that basically all the sheep are about to get slaughtered. So there we have it, guys. Crypto trend trader. Quick update on Bitcoin. I am sorry if you're long in these markets right now, hey, you got to learn from your mistakes. The most important thing is just keep playing the game. Proper position size and risk management, as well as a trading plan and a trade journal, will do you wonders in this world. If you go back here and you look at why you bought the absolute top right there, why you bought into that breakout, why you thought it was going to the moon, you can write that down on a piece of paper. You can hang it on your wall and make sure that you never do that again, and learn your lesson about FOMO for the last time you ever need to learn it after that. But chances are probably the same people learned it right here as well, or should I say didn't learn it. So there we have it, guys. Crypto trend trader. Quick update on Bitcoin. I am sorry that I'm negative today, but it just gets annoying seeing everybody be extremely bullish and saying buy the dip, and it makes no sense whatsoever, because if you're going to get rejected by a moving average back to the upside and find support on it, you would expect a bunch of wicks like this or violent attempts to move back to the upside followed by continuation, and we see one wick right here, and then we essentially just see it rolling over, and now it's just hanging out on top of it. And the longer we just sit on top of that, the more it's going to look like a descending triangle, the more it's going to look like this channel is just going to play out, and the more it's going to look like we will get a violent big red candle. So protect yourselves, protect your capital, yeah, that's it for today. Crypto trend trader, and I'm out.